Hit it. It's Friday, August 20th, 2021, episode 145. I'm Patrick Ceresna.
And I'm Kevin Muir. We continue on with our interview-only summer specials, but this week, fan favorite and friend to the show, Morris Sachs, turns the table on me and takes the interviewer chair. Morris digs into all my early childhood traumas and finds out why I love trying to solve the greatest game ever, this huge puzzle we call the markets. A big thanks to Morris for taking the time to join us at the Market Huddle. It's much appreciated.
Okay, on to the interview.
Hi there, and welcome to the Market Huddle. This is the Market Huddle special correspondent, Morris Sachs. And today we interview famous trader, blogger, podcaster extraordinaire, Kevin Muir. Kevin, welcome to the show.
Thanks for having me on, Morris. I appreciate it.
It's always a pleasure. You're a fan favorite. So today we thought we'd introduce you to the listeners and dig a little bit into your background and find out really what makes you tick. Because typically the tables are turned where you have the market expert and you get to dig into their
I can just sit back and take pot shots and keep the conversation going.
Exactly.
Now you're actually going to ask me what I think and stuff. It's going to be hard.
Well, yeah. I mean, I better ask you what you're thinking, not what you know, right? Okay, so let's start, chapter one, okay. I am born. Okay, Canadian?
Yes, I am Canadian. I was born in Winnipeg, Manitoba, a great prairie town.
Okay.
I was brought up in that cold town. My father was actually the research director for a firm called Richardson Greenshields. And they were, it was kind of the last of the independent dealers. Mm-hmm. And so I grew up with a lot of talk about markets at the table.
So when you say independent dealer, you're talking about equities?
Yeah, so a securities dealer. They were also a little pawn shop, but the reality is it was mostly equities.
Okay, so the notion that you have talks about the market around the dinner table, is that for real or is that just...
No, it's for sure. I loved games. I loved chatting about markets. I've been fascinated with them from the time I was little. Like it was just, literally, I am one of those few individuals that knew what he was wanting to do and ended up doing it.
Well, that's funny because that's the same thing with me. I did my first trade when I was 10.
Yeah.
How about you?
So I guess I did my first trade when I was 16 or 17. I still remember it. It was actually the US dollar index and it went limit down against me. I think I bought it and it was limit down. So it was, wow. I fell in love. I read Market Wizards and that was the book that just, changed my life. I thought to myself, this is the greatest thing in the world. I wanted to trade futures. I didn't want to be an equity trader. Like, my old man had always traded, moose pasture mines and all these crazy, Canadian kind of mining promotes. And for me, that was just, I didn't want to have anything to do with that. I wanted to go and I wanted to trade futures.
So they gave a 16-year-old a futures account?
Well, funny enough, my dad had to co-sign that our firm was also my dad's firm was also a commodity broker. Oh, so okay. He went and co-signed and gave it. And I still remember the story because I went down there and he's like, okay, we'll go down to the floor and we'll, meet your broker and introduce him. So he introduces him to the guy and introduces me to the guy and says, listen, this is Kevin. He's got, I can't remember, X $1,000. He wants to be a commodity trader. The only rule is I don't want him to lose more than he has. And that was it. And listen, he knew I was going to blow up. He kind of laughs about it. And he fully expected me to lose all that money, and which I very quickly did.
That's an interesting approach, for a father to take.
It's a little bit like, when you throw your kid off the dock and you're like, sink or swim.
Yeah, well, that's what they say. What was it, Hemingway or someone said 90% of the time, the best thing you can do to a young man is throw him out of the boat and see if he can swim.
Oh, I didn't know that. I'm a big Hemingway fan, and I don't know that quote. So
yeah, I've been wrong once or twice before, as you know. So 16, you're long the dollar index, and it's down limit. What did that feel like?
Oh, brutal. Just like you think that. It's devastating. You think to yourself, oh, I'm such an idiot. I can't believe I've done this. And it was very quickly I realized that this game was a lot harder than I ever thought. Like you read all these books, you do your analysis, you think, oh, this is it. And in some ways, it was probably good that I lost in the first trade, because there's nothing worse than,
Absolutely. I was about to tell you it was a blessing, but
yes.
I was hoping you would say that.
So you get a real taste for, being wrong and being on the wrong side of it, and you think to yourself, okay, well, it's not as easy, and that was like, I can't remember why I got that money. I might have been a little older. That might have been the money that I graduated from high school with, but it was around that age. Okay. And then very quickly, I just started saving up to do it again. That was it.
So how did it go? You walked into the pit, you tugged on his trading jacket and said, buy one at the market?
No, no. So I can't remember how we did it. And like, I honestly just remember the feeling of it being locked, limit down. Like I phoned up, I think I was still going to school, so it must have been something. And I phoned up and asked, like, what's the quote? And it was like, the guy's like, it's locked limit against you. And I was like, holy shit. And it was very quickly, I almost lost it all. Like the broker almost broke the rule that he promised my dad, which was to not lose all your money. And
yeah, it's tough to make that promise with margin.
Yeah. So anyway, listen, my dad was a great guy that really, or is a great guy, but he's still around. But he was very encouraging of all of his kids to do what they were interested in, and he encouraged you to do it. And so for me, it was trading. My mom wanted me to be a lawyer, and like I would have been the worst lawyer in the world, Morris. Like I would have been terrible. Yeah. Like I know myself, and like I know myself, I would have been, first of all, gone bananas in terms of the discipline, not discipline, the kind of strictness of it. And then not only that, I just feel that I would have been so bored. I would have gone crazy. I would have been a miserable person.
Right. So, you and I are similar in that we started trading at a young age. I had a visualization that I actually sort of saw myself as a proprietary trader, but I didn't even realize what that meant at the time. So tell me about, so you're 16 or 18, you decide you want to trade. Did you have a sense in your mind what that really meant?
Well, you see, I was a little bit younger than you, so I had the benefit of Market Wizards. And to me, that was like the mind-opening book that just kind of said, oh, look, these guys, they can be just traders and make a living doing that. And the great thing about it wasn't just one or two guys. They went through, and there was 10 of them on there that that you could.
Oh yeah, sure.
Right, and
sure.
and there was a varied. It wasn't just one path. Like it was, one guy did it this way, another guy did it this way, and it was all sorts of different things. And so it just, to me, it very quickly I realized that there was a whole other world out there apart from regular stocks. So I would say that I became very interested in derivatives really quickly. Right. And that was the real attraction to me, was that, a lot of people in Canada, they traded, we have a history as a nation of having like the Vancouver Stock Exchange and lots of speculation, you go through it. It's not like taking risk is that unusual here. Lots of people have made fortunes. There's some very colorful characters that, especially in Vancouver, that have just made themselves absolute, mints doing kind of stock speculation. But for me, I was very quickly like, I didn't want that. I wanted to be like the futures guys. I wanted to be the derivative guys.
So how did you think the best way to go about building your career would be? Did you go to university?
Oh, so like, you make it sound like I had some sort of grand plan. Like the reality is I just kept chugging ahead. So here, I'll give you my my story. I went to a school called University of Western Ontario, and that's kind of the school that had the best business program, because I thought I wanted to go into business. And so I thought that. And I got there, and Morris, I played way too much cards. Like I just played cards, and like, so it was just cards. And I didn't do that bad, but I didn't, like, previously I had been a very, very good student, and I didn't do as well as I should have. So I came back, and I came back to home to Toronto, And at this point, by the way, we've moved to Toronto. We moved here when I was 17.
So did you finish your education?
Well, yes.
Okay.
I'll tell you because it's a long story because there's a lot of spot parts.
Well, we got time.
So, yeah. Okay. So I come back to Toronto. I say, I come to U of T. I start going to school here. I think at this point I'm still living with my folks. And eventually I find a friend who's in a fraternity. I join the fraternity. I'm not really a fraternity guy, just I didn't know anyone. So it just seemed like a good way to kind of meet people and stuff. And then I kept looking for jobs, and I ended up getting this job at what was called Bank of Montreal Investor Line. And that was basically one of the first, it was technically the second discount stock brokerage in Canada. Okay. And this is in the early 90s. And at this point, I think when I went there, they had 6 or 7 employees. It's 1990 or 91. And what's happening is the market's going crazy, but they're still all worried about the 87 crash.
Sure.
So they refuse to hire anyone. Right. So they just go, why don't we just hire some, a kid?
And this is why you're going to university.
Yeah. So
it's a part-time job.
Right. So it started off like, can you come in at 4 to 8 o'clock to actually answer the phone and give quotes? Because back then people would phone and ask for quotes.
Yep. I know. Yeah.
So I said, sure. And they paid me like $25 an hour back then. And that was like a lot of money. So I very quickly was starting to make good money. And then they started saying to me, it's really busy. Can you work a whole day on Tuesday? So I'd go, shit, class is easy. Let's just skip that. So next thing I know, I'm working literally 8 to 8. I'm working 12-hour days. Right. And they're paying me $25. Like it's almost cash.
And then when you're done at 8, then you can hit the card games.
Yeah.
How'd you give that up by then?
I had given up playing cards. So so I'm doing this. I'm making all sorts of money doing this, and I'm still a young guy. I'm going to school, and next thing I know, they say, "Listen, we'd actually like you to hire. Come on full time because you're working so much."
Oh, great.
And next thing I know, I'm actually the manager of this thing, and I'm just a kid.
Do you have any securities registration?
I think I had to go get it, so I go get my license, and so I'm licensed to take orders. And
so that'd be like a Series 3 or a Series 7, or
I think it's a 7 equivalent. We have the Canadian securities, and so then I got my options, and I got the whole 9 yards. So it's kind of within a year, I'm in charge.
That's pretty good. I mean, sorry to interrupt you, but I think it's important for people to understand that to still be in college with a part-time job to have a Series 7 I think that's an accomplishment. I think, we should acknowledge that. I mean,
What's even funnier, Morris, is that I was a manager. And so they made me like a level M5 manager. Like I'm literally this 20-year-old, 21-year-old kid. And I'm above the bank managers, like literally the people have spent their whole time. And I'm this bank manager. So I do this for I don't know, a year and a half, maybe 2 years. And all of a sudden I kind of look around and I say, listen, I'm on this route to being like a bank manager. This isn't what I want. I want to be like a trader. Right. This is all wrong. And the money's great, but this is not what I want to do. So I actually, the woman that was also a manager with me on another, I think she might have been customer service. And I was anyways, there's another woman that I knew, and her husband was an institutional trader.
Okay.
And he got me a job in Chicago.
Nice.
So I left my job, left school, and just took off and went to Chicago.
So you're 0 for 2 in university at this point?
No, yeah, I still haven't got my degree. So I take off to go to Chicago. Now I get there and, it wasn't for me. It just wasn't. The pits.
Where in Chicago did you live?
I was at the Merc. I lived in the towers. What are they like? The
presidential towers.
What was it?
It's like there were 4 brown towers on the south side.
They called it like the Merc dorm. It was like. Okay. Anyways, it wasn't for me. I wish I had probably stuck it out longer. I was young, immature. I probably wanted to go faster than I did, but it wasn't for me, and I came back.
Okay.
And so I come back, and at this point, I still don't have my degree. I've come back. I've kind of okay, what am I going to do? I go back to start going back to school. And then my father tells me, he says, okay, this is what you're going to do. He says, you're going to write your resume. You're going to figure it all out. You're going to make a good cover letter. And you're going to send it. You're going to figure out what the 4 or 5 trading desks that you want to work for. And you're going to send them a letter. Okay. And then you're going to follow up.
Great.
So I do this thing. So I write my resume. I write my cover letter. And I send it off. Okay, I send it off to all 5, and then my dad says, "Okay, you're gonna follow them up. You're gonna phone each one. You're gonna figure out who the head trader is, and you're gonna phone them up, and you're gonna ask them." So,
and you're how old at this point?
22, maybe 23.
Okay.
No, I'm 22. I'm 22, and I'll never forget this, Morris, as long as I live. So, the firm I wanted to work for was a firm called Gordon Capital, and Gordon Capital was this firm, and they were aggressive. They were ruthless. They had actually created in Canada what was known as the bought deal, where they buy pieces of I can't remember who did it first in the US. I think it might have been Salomon Brothers and maybe JP Morgan. I can't remember who did it, but they had brought this to Canada, and they were just this terrific shop that I wanted to work at. So I phoned them up. So imagine this, I'm a 22-year-old. I've sent off my letter to this trading desk. I don't know anyone, my dad doesn't know anyone. This is just purely cold calling. I phone him up, and I know the first guy's name is Howie. And I phone up, and I get the trading desk, and I say, "Can I speak to Howie?" And then, Howie gets on. And I start to say, "Hi, I'm Kevin Muir. I sent you a letter, blah, blah, blah." And he just lays into me. Just starts telling me, "What are you doing right? Fuck off, kid." He just the biggest, most miserable asshole you can ever ask for. Okay. Yeah. And then just slams the phone in my face. Okay. So I'm this kid, and I literally felt like I wanted to cry. Yeah. It's just honestly, I probably did cry. I've probably forgotten it or whatever. And my dad comes home that night, and he says, "How did it go?" And I tell him the story about Howie, and he laughs just like you. He thinks this is funny. And then he goes, "How did your second one go?" And I said, "What do you mean my second one? They don't want to hear from me." And he goes, "Listen, you're going to get on the phone, and you're going to go and you're going to phone them all." And I literally, there's some of those moments in life that you kind of change your life forever. My dad pushing me to go and to phone the next one was one of those moments. I can point to that. Had that not happened, I would have led a very different life.
The longer I know you, it's shocking how much our lives have paralleled. Now, just as an example, one of my daughters had a roommate, and her roommate had a boyfriend, now husband, and he was a teacher, but he wanted to get into trading.
Yeah.
And so he said, "Well, who do you know? What can you do?" I said, "That's not how it works." I said, once you graduate, if you're not a business major, you got to start at the bottom. And so I said, "Get 200 resumes, go down to the Chicago Board of Trade," because you live in Chicago. And I said, "Whatever you do, just get into the building and go from door to door, floor to floor, till you get a job, right?" And the kid never did it, and he's teaching high school somewhere. But to your point, right? And to your dad's point, everybody wanted these jobs, right?
Oh, for sure, yeah.
I didn't want to. You were on a flow. I thought you were going to call Howie back the next day and say, "Hey, guess who's here?"
That's the difference between you and me, Morris. You probably would have.
Oh my God! Well, that's great. So
the next call I phone this guy, and I get this very famous trader. There's National Bank Financial, or actually, I think it was National Bank. It was a guy named Mike Weckerley, and in Canada, he's very famous, and he's got quite a reputation. The guy is just, I think he's on Shark Tank and stuff. He's just kind of one of those guys who's famous / infamous, right? But the thing about this is, Mike Weckerley, whatever people want to say about him, he was the kindest, nicest guy to me. He had no job. I phoned him up. He was my next guy that I got, because that was my second firm, best firm I wanted to work for. He took out, 10, 20 minutes, chatted with me,
for him.
and it's like, I've never actually had a chance to tell him and I'm trying to get him on the show, and someone knows him, but he's just, he's busy. But I would love to be able to tell him that was actually one of the greatest things, because it gave me the courage to keep going, because he was nice and he was kind. Mm-hmm. And so, anyways, the long and short of it is, I keep trying. I got it ended up being I got 2 jobs, and this is again where my dad's advice ended up being very important. I got a job at RBC Dominion Securities, which is the job I ended up taking. But I also got this job at Midland Wallwin. And Midland Wallwin was this kind of another little boutique firm, but stuff. They had it just seemed kind of fancier, and it seemed, I don't know, they seemed more enthusiastic about me and stuff. So there's one of these things that they made you feel better.
Sure.
And I wanted to take the Midland Wallwin job. And my dad says, are you kidding? He said, you take the job where you're going to learn the most. This isn't all about the end. This is where you're going to learn.
This is a very smart man.
Yeah. So, so he said, this isn't even close. You're going to, if you get the DS job, you're taking the DS job, because DS was like the Goldman Sachs or the Salomon Brothers of Canada. And so he pushed me to take the DS job. And I remember they asked me how much I wanted to make. And I knew enough to say, I don't care about making that much right now. I want to be paid when I contribute. And so right now it doesn't matter. So I still remember my first job. I literally got it. I think I was making 24 grand or something. And the funny thing about it is, I don't think that my base ever went up, or if it went up so small. Right. And so kind of years later, I remember that I had signed up for some kind of some benefits, like insurance and stuff like that. And my base was so small, I didn't get an actual paycheck for the first 4 months, because my benefits, that's how small it was. But I ended up, so I got this job at RBC Dominion Securities, and my boss, I got hired by a young guy that was, he was kind of, I was 22 at the time, or 23, and he was probably 29 or 8. Right. And he always tells me, he says, Kev, there were guys that were better at computers, and there was guys that were better at trading. You were the perfect mix of both. So what I had gotten hired to do was, this was in the days of the infancy of indexing. Okay. So in the past, the institutional desk would just simply trade individual blocks, and nobody would trade a list of securities. Okay. RBC had been actually at the forefront of computerized trading through another division that they'd had. So they had kind of gotten this Wells Fargo, which eventually turned into Barclays, which is the world's largest indexer, and especially at the time. And they needed help. They needed a young person to actually cover this and execute these trades.
And at this point, I keep coming back to this. You still haven't graduated university.
No, so I still haven't got my degree.
I'm not making fun of you.
No, it's completely fine.
There's a point to this, because we'll keep going. I'll come back to my point.
It's funny. When I got hired, my boss, that guy that I just told you, I actually got hired by his boss. And I asked that guy, I said, do you need me to get my degree? Mm-hmm. And he says, I don't care if you get your degree. He's like, I don't care. You do what you want to do. So I did get my degree at night. I continued. I worked basically from the point I was 23. Actually, I was 22 now that I think about it. Okay. I was 22 when I got my job, and I got my degree at night while I was working on the institutional desk. So
that's fantastic. The reason I kept coming back to this is, I'm a bit older than you are. I went to the University of Illinois. I had 2 degrees, but they're in accounting, not in markets. But I think we're similar in that if we were 18 or 20 or 22-year-old kids today, nobody give us a shot. I don't think, right?
Yeah, you'd have to figure something out. I almost think if we were 18, 22-year-old kids today, we'd probably be trading crypto and doing something a little more adventuresome than we are, Morris. We would probably be on the cutting edge of something. Because, I know everyone makes it sound like, you guys didn't do anything that cutting edge. And the reality was back then, it was very cutting edge. Just even the idea of trading a basket of stocks. I know that sounds dumb and like God, like that sounds so simple, but very few firms were doing it. Clients didn't understand it. Like I remember we got dragged into a client's office because he's like, this bastard knows my portfolio. He sold every stock in my portfolio. What he didn't realize, we sold every stock in the index that day, right? But he had just looked at his names. He's like, look at that, DS is there and stuff.
And anybody that tries to tell you that it was easy back then, or it was obvious, they weren't there. Because it
was still the same deal. It was still the same percentage of people at the cutting edge of stuff.
Yes.
Right? Like it's always the same. Listen, there's someone somewhere today making a fortune in something we don't understand that's way more complicated, that in 10 years and 20 years will seem so obvious to us.
Yeah. Well, unfortunately, that sounds like the Bitcoin.
It probably is. Like it probably is. Or it's high frequency trading, or it's something, or it's algorithmic trading. There's going to be something somewhere where someone's doing it, because the reality is that person's not telling us about it. They're not getting on podcasts and talking about it.
So this is one of those things I've always scratched my head with. So just for a point of reference, let's say 18 months ago, a good friend of mine, Leslie Harris, introduced me to your blog. And I started reading this stuff, and I fancy myself someone who understands maybe not which way the markets are going to go, but certainly how they function. And I knew right off the bat that this guy knew what he was talking about.
Oh, thank you. It's very kind of you to say.
Well, it's the truth. That's the good news, bad news with me. But the difficult part for me was understanding why you would tell anyone.
Well, listen, there's a lot of reasons, like meeting people like you.
Yeah.
And we'll eventually get on to like how I was like, let's just say isolated because of where I ended up. And part of the reason writing the letter was to meet people and parting, is to discuss it. And I love chatting about markets. I do this, even if it didn't pay like it does. Like I am not one that's here for the money. I'll show you some decisions that I made that you'll be like, oh, clearly he's not in for the money because look how stupid he was. But I do this because I love it. I love markets. Much to the dismay of my wife, I tell her I don't ever imagine quitting. Like I just don't. Like in terms of this is what I love to do, and to me, it's the greatest game, and it's so interesting. It's always changing. There's nothing better. And it's just like I was always made to do this. I love learning about stuff. I love meeting people like yourself and learning about different parts of the market that I understand. And I'll, as we go through here, you'll see one of the things that I love doing is coming up with a trade, figuring it out, implementing it, and then just handing it off to someone because I didn't want to do it. It was more like the learning of the trade and kind of finding it was more exciting than the kind of doing it.
I agree wholeheartedly. I mean, I'm going to be 61. And, I'm at the end of the rainbow, as they say. So, and I love talking about it with this stuff. But the big difference, I think, between you and me is you seem to enjoy talking to many different people. I'm a little bit difficult. Like, I got to find the right personality because I don't hit it off with many people. So I kudos to you. And you know what I think it is? I think it's just Canadians are just warm, wonderful people.
Oh, that's very good. It's very kind of you to see. Unless you put, I think, what was that late night talk show host that said the Craig Ferguson? I think he said Canadians are warm and kind people until you put a hockey stick in their hand and then tell them that the other team has the puck. So he said something like, if you want them to win in Afghanistan, you just have to send them there and tell them that they have the puck, and we'd win. So I get this job at DS. I'll just kind of keep going here. And it's truly my dad's advice about being around smart people and being able to learn from them paid off in such a huge way that made it so that, sure, I was interested. Sure, I had read a lot. But in terms of speeding along my kind of education as a speculator, as a market participant, it went way faster. And you look at the people that came from that firm, it's just like Goldman Sachs. It's like you won't know them, but it's all like the who's who of Canadian hedge funds. And there's some, it was just such a great place to work. It was such a great place to learn. Like I'll just tell you quickly a story, in terms of like what we were doing. Like I remember having my big boss, he used to sit at the end of the table or the trading desk. And so he's sitting there and all of a sudden he gets a call overhead, like, cause everyone's got this direct line. Mm-hmm. So he's got and I hear him whisper and he's like whispering back and forth. And after kind of a few minutes, he hangs up. And then he whispers over to my immediate boss, who I was lucky enough to sit there and kind of be his assistant and start learning for the first year or two. And he says, okay, start buying Methanex, buy everything you can. And so he doesn't tell anyone at this point because he's just buying on the board. And the guy that I'm working for says, how much do we buy? And he says, let's put it this way. Yeah. He said, I'll tell you when you get close.
Stop. Yeah.
Yeah. Like that was like literally how big it was. So, the first day comes, we buy everything. We buy like 4 or 5 million Methanex. We send it up like, it's like a $13 stock or $12 stock. We send it up 50 cents. We keep doing this, and then eventually we start trading blocks because we're moving it up enough. People are noticing. So, we're pretty upfront about that we have a lot to buy, but still guys want to make sales. So we're starting to do it. So we do trades. This goes on for, I don't know, a month. Like a month. We're buying
every
this
day.
Stock. Yeah, we're just buying this stock, some days we're more aggressive, some days we're less. Yeah. So I'm sitting there, I'm watching, and I'm like, who the hell is this? So I have finally, I muster up the courage to ask my boss. I said, who is it? And he says, it's Tiger. I'm like, listen, this is the days before internet. Like there might have been internet, but it wasn't as easy. So like, I definitely didn't have it at home. At work. No. So I had to go home, like figure out who Tiger was. So I figured out it's Julian Robertson. It's this big hedge fund. So we're buying all this and it's going on and on. I'm waiting for it to end. And then all of a sudden one day we get my big boss gets another call overhead. And it was super, I go, here it is. Like, and I go, here it is. This is it. This is the point where, he's going to stop buying. Everyone should get, short the last little bit because we're going to do a print. And next thing I know, there's some more commotion because I'm not sure what's going on. And then kind of like, later that day, he says, listen, we're going up on 8 million Methanex, and let's say he's taking it from $12 to $22. He says, we're going up on 8 million Methanex. The print's going on $1.50 lower. Like we're going to sell it down. Right. And he says, and we're coming out a seller. Okay. And so what had happened was, so I whisper over to the other guy, he says, who's selling that? And he says, it's Quantum. So it's Soros. Right. So so I'm sitting here watching this, right? Like I can see this, evolve and like being able to see these different things happen and just kind of being involved in those sorts of trades and learning how to do it. Like it was actually really, really, it was a great kind of, as I say, an education. Like the other thing that I ended up being good at was the idea of how to make trade. And nowadays it doesn't matter as much, but and you were more of a prop guy, but we still had to be like, I was still sell side for a while and I was an institutional trader all the time. But I remember very distinctly my big boss watching him and how helpful he was because one day there was this new issue and it was like, I don't know, Manitoba Tel or something comes out and they float this big IPO and it was back in the days of eights. So the market's like 10 1/4 to 3/8. Okay. Right. Okay. And the regular trader that's trading Manitoba Tel goes out and starts screaming out to the desk. He goes, I'm quarter bid 300. I offer 500 at 3/8. Okay. Meaning he's just on the quote. Right. And my big boss, I watch him. He goes, okay. And he says, I'm going to take over. He takes over. And what he does is he doesn't say anything to the desk, doesn't do anything. He looks at it for a bit and he says to his trader, because he doesn't put any orders in himself, he says, sell 500 at a quarter. So he hits the bid. Market eats it. Still a quarter bid, but it's not quite as strong, right? So he looks at it, waits a little bit, and he goes, sell another 500 at a quarter. So now all of a sudden the market goes, 1/8 to a quarter. It's his offering. Okay. And now what he does is he screams out to the desk. He says, I'll pay a quarter for $1 million.
Yeah.
And sure enough, next thing we know, we got the trade, right? Like the trade, because you're now paying the offering side.
Right.
And understanding these little tricks and how the world is not like any Joe can go out there and go,
Sure.
but it was those kind of little things that you just started to appreciate being at a firm that had guys that understood those things.
We would have something similar in that with the treasuries, there would be 4 or 5 brokers with screens. And if you were trying to buy something that was maybe 13 bid at 14, you'd put a 14 bid in for a tiny, million or 5 million. And then you go whack the 13 bids in the other screens. And guys would come in and then they would, think they were getting you or something like that. So if I could, what I'd like to do is sort of get into your mind and see what pushed you in the direction towards going out on your own and becoming a proprietary trader. The reason I think I'd like to spend some time on this is having myself been a dealership trader and going to a prop area and understanding the difference between being in the flow and seeing things like you just mentioned versus, as I like to say, a pen, paper, a Bloomberg, and a phone.
Yeah.
That's quite a transition. So
you're absolutely right.
Tell me about that?
Okay, well, I guess I should explain briefly that I moved up within a couple of years at DS, and I had decided I wanted to trade pro 100%. So I didn't want to have any clients. Mm-hmm. I didn't want to do the index. And ultimately, it's one of those cases where I had to get a job somewhere else. So I literally got a job at another bank, and the guy had offered me a job saying, he said, he came to headhunting. He says, what do you want? And I said, I don't want to trade for clients. I want to just trade pro. So he said, if you want it, it's yours. And I said, okay. And so I went and I quit. I actually quit at DS. So I went there and they said, well, why are you quitting? And I said, well, I've been telling you for 9 months that I want to trade pro. And so they said, okay, can you give us a day to figure it out? So I said, sure. So I sat on the desk, not allowed to trade for a day. Then they came back to me and they said, okay, fine. You're going to go into this new division, this equity derivatives group. You can just trade pro, go hire somebody to replace yourself on the main desk.
Oh, okay.
So I very quickly at a young age kind of became fully pro, like fully prop trading.
Right.
Yes, we had clients that we had to make markets for and things like that, but it was mostly just prop. And it was very lucky in that I got paid. We were on a direct drive deal, and I was
So in English, you got paid a percentage of your profits.
That's correct. So we were, listen, it was still the bank. They still figured out ways to screw you. They did holdbacks. Right. They figured out a million things, but it was much more direct than most other places. Okay. And I had a great boss that let me run. And
so without not asking for numbers, because that's nobody's business, but was the salary a large component of your income?
Salary, I literally, as I told you, I think I made 40 grand and and I had some really, really good years there.
That's terrific.
Yeah.
But what I'd like to point out, having, been a proprietary trader for so long, is what it feels like when you got to put food on the table for your family. And if you got a minus sign on your P&L, there's no food.
Yeah.
I mean, obviously you got savings or this or that, but, and so I know this is me interviewing you, but as an example of this. So, at the firm I spent the bulk of my time, we had a dealership group, and then we had the prop group. I ran the prop group. 90% plus of the dealership traders were profitable every year. And initially, the prop guys, only about 50% were profitable.
Right.
Because you had the flow, you saw the information, right? And so to the point of how difficult it is when you don't see the flow, when you don't get the bid offer spread, and when, it's rubbing two sticks together.
For sure. Listen, I think when I went to the prop group, I think I went down in terms of I went from the institutional group, which was like just a discretionary bonus as part of the main group. And now all of a sudden I'm living and dying by what we make. And I'm pretty sure I went down. I can't remember exactly how much I went down, but if I didn't make anything, I was going to make 40 grand. Like that was it. And not only that, the 40 grand was a draw. Like we owed it.
Right. How old were you at this point?
26, 27.
Okay. Yeah.
Yeah. I was like young.
Very,
now,
very
listen,
similar.
I was very lucky in that I didn't have kids at this point. I didn't have, like, I could go for it. Right. Like, and listen, I'm not going to kid you that I got extraordinary fortunate with my timing. I was in a great firm at a great spot with the right set of skills. Like to some degree, it became like shooting fish in a barrel. We had an absolutely monster edge. Like I was the index derivatives trader as indexing was taking off. Right. We were responsible for all the rebalances. We figured out a couple of trades that had a good, like, steady cash flow. And it was just one of these things that, it just all worked out. And I remember going to my boss and I remember saying to him, he'd give me my check and we got paid quarterly, which was very unusual. Yeah, we got paid quarterly, which was very unusual. But you know, and I'm a big believer in paying people quarterly because I feel like when you do it annually, people spend their whole time lobbying at the end, right? Like it's all politics for that last month. Quarterly, you don't have time to do all the politics. It's just kind of always coming. So we got paid quarterly, and I remember always just saying to him, he says, "Here's your check." He'd give it to me, and I'd say, "Great. How can we make more?" And I was never worried about my percentage in the group, even though we were direct drive, but there was still like 6 or 7 of us. And so I never sat around worrying about my prediction.
Okay, so it was a pool.
Yeah, it was a pool that was direct drive that my boss decided on. Okay. But the thing about it was that, like, I realized that I could go and like double our revenue. Like I was doubling it and doubling it and doubling it. Yeah. And I said, well, so I'm making, let's just say I got 15% or whatever the number was. I could sit there and complain that I deserve 20 and argue about it. Or I could just go double the stupid thing and make way more. So my boss and I got along like a house on fire. It was terrific. He was a great guy. He was good at all the kind of accounting, taking care of everything. Basically, what he did was just took care of all the politics for me and just let me trade. Like that was it. Basically, I love to trade. I love doing all those things. We figured out a whole bunch of things. I was lucky. We were at a great firm with a huge balance sheet at the time when our, was exploding. And so we made a lot of money. Like we did very well. Like I made way more than anybody my age should make. Like, I was very lucky. And, but the thing about it was that it really was never the money that really I loved. I loved trading. Yeah. So,
and that's where the troubles began.
Yes. So the problem was that, I would get into trouble, like, Morris, like we weren't allowed to do tax trades. Okay. If for those who don't know, there was a tax trade that in Canada in the equity market that was basically grossing up dividends, and everyone did. We weren't allowed to do it, so what we did was we tried to figure out ways to arb it the other way. So we actually would put trades on backwards to those guys, and then we would go sell down the futures roll and figure out other ways to deal with the exposure, and we kind of just made it all more efficient. But the point is that we would have like these huge cash balances. Like back then, like I think we had like $1 billion, which for 1996 or 7 or whenever it was a lot of money.
Yeah, and interest rates were above zero then.
Yeah,
too.
So it was actually a lot. Like I remember getting in trouble from the main desk or the main funding desk one day because we let some futures expire, and he's like, "You can't go and take off $500 million without telling me." And I'm like, well, what do you mean? Like, you guys trade in the overnights. He goes, Kev, I had to phone the Bank of Canada for your trade.
Yeah,
like,
probably late on Friday afternoon of a long weekend.
Yeah, it was something like that. He's just giving me utter shit. Anyway, so we had this huge balance, and I figured out that we could go and they would rip me off. I would go and ask for the CDOR rate, which is like LIBOR, but for Canada, and they would rip me off. And then I would say, okay, well, listen, if you're going to rip me off, I'm going to start trading BAXs. So all of a sudden I started, trading these things around. And then the long and short of it is I started taking credit risk, and my main desk was my main boss, my big like MD was in a risk meeting, and they were going through all the positions, and they had one credit they were worried about, and they'd be like, bonds has 5 million, money market's down to 2 million, this guy's are down to 0, but equity derivatives has like 32, and my MD says, no, we don't have that, we don't do that, and they're going,
yes,
no, this punk bought you 32, right? So then I got all these rules, Morris, that were quite funny because this was right in front of long-term capital. And actually, I have a really funny story that I got to tell you. I know it's getting long, but I got to tell you the story because I think you're going to appreciate this. So I got all these rules that I was only allowed to buy R1 mids or better. Okay. I couldn't buy asset-backed papers that were the banks, which I completely understand because they were trying to get it off their balance sheet. Right. And I couldn't buy more than I think it was $250 million of any specific issue. No, maybe it was 100. Okay. No, it was 100. It was 100. That's right. I wasn't allowed to buy more than 100 of any issue. Okay. So I have all these trades on, and then long-term capital happens. Mm-hmm. And for some reason, the futures flip, and instead of going and buying paper, I need to sell it.
Right.
And so I phone them up and I go, where are you guys bid on whatever? And I hadn't been paying attention. And so, I had bought this paper at plus 12 or something like that because it was, before
plus 12 to the curve.
Yeah, or whatever, yeah, right. And they go, we're plus 90 bid. And I go, what? Are you guys kidding me? You guys are crooks. And I say to them, where are you offered? And they go, well, we're 87 offered. And I went, holy shit, right? I was like this. And I realized very quickly that we could do this ARB. Okay, so the funny thing about it is there was another bank who had sold tons and tons and tons of gamma, like a monster position in gamma. Right. And they were so big that in long-term capital, they couldn't sell any on the way down. So they waited for the market to stabilize, and then they waited for the rally to come in New York, and that's when they sold. Okay. So now they're like wanting to sell, like, they're just selling, futures like they're going out of style. Everyone is scared. And I'm sitting there and I'm thinking to myself, okay, so I can buy these futures at a big discount that are trading off the CDOR curve. I can go then invest in paper that's plus 87. And so we just did this in huge size. And the funny thing about it is I never forget this money market phoning me up and saying GE is coming to the market. And GE was like at the time the best rated one, right? It was AAA. It was the cat's meow of stuff. And they're coming. I think I remember right, because they said, we're coming with $250 million. How much do you want? Okay. And I was like, I wish I could take it all, but I couldn't. I wasn't allowed to. So I said, I'll take my 100, and I just did it. But anyway, so the point is, I kind of found different things to trade. And I really loved learning about different things, figuring things out, and we did really well with it. But if you're thinking about it from a bank's point of view, and one of the things I didn't mention is that when I started at RBC Dominion Securities, the bank owned the dealer, but the integration was very small. It was basically the dealer just trading, and it was very entrepreneurial. Right. By the year kind of 99 and 2000, the bank had increasingly played a larger and larger role. Compliance and things like that. And like, listen, as a 50-year-old today, I understand that you can't have some 28-year-old punk, slapping around, a couple hundred GE papers whenever he feels like. But at the time I was like, listen, this is no fun. You guys aren't letting me do what I want to do. I want to do all these fun things, all these crazy things. And so the long and short of it is I ended up leaving, and I left after the best check that I'd ever had. And the reason that I left then was because I wanted to be like Michael Jordan, sinking the basket and walking away. I didn't want to leave, when the market crashed. So I ended up leaving in March of 2000, just as the market was starting to roll over. And so I went on my own, and it happened to coincide with my daughter was also born, and she was born with a heart defect, and it was one of those. It was corrected at birth, but it was one of those moments where you ask, what's important and what's life all about, and like I just said to myself, I'd made enough money. Like I didn't make never work again kind of money,
right?
But I had made enough money as a 29-year-old, because that's how old I was, as a 29-year-old, that I knew I didn't have to worry about like the next few years. Like I could work, I could do what I wanted, and if I did nothing for 2 or 3 or 5 years, life was going to be fine.
Right. That's that just kind of shows what kind of guy you are.
Well,
I mean,
my wife will say it's because I don't like listening to authority, but and listen, I'm willing to accept that criticism, that there's a little part of me that this doesn't like taking not advice, but taking kind of, that doesn't want people telling me what to do, and that's ultimately why I had to go work for myself.
It's so funny because that's how I just never wanted to feel like I had a boss.
Yeah,
like I wanted to do what I wanted to do when I wanted to do it.
Right.
Okay.
Yeah.
So I want to sort of kind of move along into the notion of so you leave the bank, you take the time to get your family matters sorted, and then you decide you're going to put up a shingle.
Yeah, well,
mirror trading.
I just, Morris, I almost went and worked for a hedge fund, and I thought to myself, if I go work for a hedge fund for a year and then quit, everyone's going to remember me as the schmuck that went and worked for a hedge fund for a year and quit. But if I go try to trade for myself for a year and it doesn't work, you know what? Nobody's going to remember that year later.
Right.
So I just said, okay, let's just try trading for myself. And you know what? When I have to, I'll go get a job. And the reality is it just went well. And
well, so let's, I'm always interested in the details.
Okay.
So you're 30, 31 years old?
Yeah, I'm 30 years old.
Okay. And you have X amount of dollars.
Yeah.
And you tell
and people think it's like an amount that I never have to work. No, I need to work. I just don't need, I'm just not worried about
As you know me, the number.
Yeah, no, I get it.
Not relevant. But so you and your wife's name is Lisa, right?
Yep.
Okay. So you and Lisa have a family, you're 30, and you have X amount of dollars.
Yep.
And your sales pitch to Lisa is what?
I don't want to work there anymore, and I'm going to try trading for myself.
Okay.
And she's very she's hugely supportive. She's also like some wives, I see them, and guys get these wives and they love the money. They love the trappings of stuff. And my wife went in so she had a kind of a crummy job when we were first dating. And very quickly I started making some money, and she says, like, why am I working? Like, this is a rounding error, right? Like,
right.
And she says, let's travel. And I said, I can't travel. Like, this is like and she goes, okay. And so she decides to travel. She travels with her friends. She takes my little sister. They go to Tibet. They have some great stories, and they do it. But she tried going and buying fancy things that just didn't very quickly realize it wasn't for her. So she didn't care. It's the point.
But I guess let me distill this down. So you have X.
Yeah.
And you can go and get a job. But how much of X did you put in to your trading account? What percentage of X?
Like half?
Okay.
Yeah, like maybe more even. No, half. Yeah, half. I would say about half.
And you're
so if I lost all half, I would have probably just had my house, and I probably would have just gone back to work.
Okay.
Yeah.
And so where do you start trading? In your basement?
No. So there was another guy that I had originally hired at DS that was my programmer, and he decided he didn't want to stay at DS, so he comes, and I think this is during the tech bubble, so we get ourselves like a space in like one of these WeWork type places back then,
right? Sure.
And so we're like, we think it's great because we get to go to work in our pajamas, and and literally we just like this had been like the one thing about DS is that It was run by a fellow that didn't believe in casual Friday. Like he literally was the last guy to do casual Fridays, and like so we had to wear suits the whole time. So for us, this was very novel. So I get a place and we just start trading, and I'm lucky because at the time you had to go get registered to have direct market access. So I had planned to go get registered as a portfolio manager to get direct market access. And I happened to know the guy that runs this. It ended up being E-Trade, but at the time it was called Versus. And we talked to the lawyers, and they say, you know what? We think we can get you in under this other rule, which was an exemption for direct market access. So I think that we were literally the first direct market access exemptions around, and it wasn't us, it was completely their lawyer. So we do it. So the long and short of it is I don't even need to get registered as a PM. They hand me what we call a Quantex box, which is a Unix machine that we had traded with to write our different
it's a Sun
workstation. It was like Ultra 80s, and so we buy ourselves a couple of Ultra 80s, and Bob's your uncle. We start trading, so we just get going, and we had this interlisted arbitrage strategy that would pay the bills. So really, for a long time, the kind of structure was, we had an arbitrage that provided me with a nice stable money, and then I could then trade the extra. And in hindsight, I've made a lot of mistakes in my life, but in hindsight, I didn't understand how important that nice stable portion was.
Yes.
And to your point, when you say like it's one thing to trade on your own, when it gets when you need to make the money, it gets a lot harder. And I can attest to you, when you don't have some sort of stable revenue and all of a sudden you have to make the money, it's a lot different. You start pushing trades, it's dumb.
That was one of the kind of the things I tried to do. I never had my own up until, I stopped working, but didn't have my own capital risk. But we would have mean reversion trades that we felt would generate some P&L on a regular basis. And then we could lean against that.
Yeah.
Which was a big help. So is at this point you decide you need some external stimulation, and that's when you start the newsletter?
No, so I did that for many, many years, just all on my own with the guy. Eventually we hire another programmer. We hire a woman to do the ticketing and stuff, but it's basically just the two, or end up four of us in an office tower eventually. And nope, for the longest time, that's what I did. And I didn't talk to pretty well anyone. I just traded, and I found different things to do. But people would always say, "What do you miss?" And I always told them I miss two things. I miss the camaraderie of a trading desk, and I miss being the guy who sets the price. Because in the past, like somebody would phone up, say, we're going up on 750 of this. Do you want any? I'd be like, yeah, I'll buy 400 at this price. Right. And I'd set the price. Now they phone me up to go, we're going up on 750 of this. Do you want any? And I kind of sheepishly say, like, I'll take 20, but I understand if you don't want to write the ticket up. Right. I completely get it. As a guy who traded size, like those guys are just getting in your way. Yep. And so I missed that. But, I was lucky. I just we were successful, and I kept thinking I'd have to go to work, and I kept doing well. So I just kept doing it. Eventually, yes, I did start writing the letter. It started off as a diary, because they always say good traders should write diaries. So it started off.
What year is the year you started the newsletter?
Like 12, maybe 2012.
Okay.
Yeah, I went a while without writing it.
I remember at one of our conversations, we were FaceTiming, and you had your sort of spiral notebook kind of thing, and I must have 15 of those.
Oh yeah,
and because I've kept them, thinking one day I would want to go back.
No, I have one that my father just gave me, and it was literally from when I was like it might have been like when I was with my US dollar position, like when I first started, because I had read in
Really?
it was, and it's
That's
and
amazing.
you know what's funny is I expected to be so cringeworthy, and I thought it was going to be so embarrassing, and it wasn't as bad as I thought it was going to be. I don't know if my expectations were just so low, but or what it was, but it wasn't as bad.
That's like the parent that keeps the letter from their child
That's
when they sent the letter home from summer camp.
That's right.
Kind of thing.
The artwork. Except in my
And
case,
then,
it was trading diaries.
And then we go from writing the letter to, I guess, 2 years ago you started the podcast?
Yeah. So the podcast, how did that start? So Patrick had me on Macro Voices, which is the big main one. And I'll tell you, I was so bad. Morris, you can't believe how bad. Oh,
I refuse to believe that.
No. Oh no. You can ask Lena. I was so bad. Actually, Lena didn't do it. It was her husband or fiance, Luke, that did it. But I was so bad. I was so nervous, and I did so terribly. And I thought to myself, they're never going to ask me back. Like I thought. And it was one of those things I almost didn't do it. And I just said, if anyone asks me, I'm going to say yes. It was just like, I was uncomfortable. It wasn't something that came naturally to me. It was just something that I said, you know what, I'm going to figure this out, and I'm just going to keep saying yes. And if people ask, I'm going to do it. So sure enough, Patrick came back and asked me to be on Macro Voices again. I didn't do quite as bad that time. And then Patrick said, I would like to have a kind of something else, apart from just the Macro Voices. Would you be interested in doing a podcast with me? Wow. And I said to him, listen, it's tough to compete against Americans. They have all these, there's so much great podcasts out there. There's going to be people that know stuff, that have better context and things like that. Why don't we make ours just fun? And I said, at the end of the day, if it's fun, then we'll enjoy doing it. And and I said, how do you feel about drinking beer while we do it? And he was all for it. So we just started it. And I'll tell you, Morris, it's been one of the biggest surprises. Yeah. I was actually shocked.
I get it.
And I would do it for free. I would do it if no one listened. Not for free, but meaning if nobody listened. Not that we get paid for it. We don't get paid. But I'm just saying, even if there was no upside, nobody was listening, I would still do it. I get to meet people like you. Sure. I get to meet people like Jim Leitner. I get to pick their brains. I get to ask them questions. I think it's the greatest thing that I the biggest surprise and one of the most pleasant surprises. And I'm so happy I've done it.
I couldn't agree with you more. I know in my case, two things were happening simultaneously. One, you had, because we'd gotten to know each other in the comments section of your newsletter, and I think it asked if I wanted to be interviewed, and I pretty much remember saying no.
Yeah, you for sure do. I remember that. It was a hard no.
Yeah, those are the best kind. And my friend, once again, Leslie Harris, said, what do you got to lose, kind of thing. Yeah. And at the same time, one of my personal friends and writing buddies, Liam Allen, was like, we got to start a podcast. People want to hear what you have to say, yada, yada, yada. I'm like, nobody wants to hear what I have to say. And for whatever reason, somebody caught me at a weak moment, and I agreed to chat with you. Yeah. And I don't remember what we talked about, but the time went, it's like today, the time went by in a heartbeat. I had, more fun than a barrel of monkeys. And now, Liam and I have this podcast, Inside Baseball with Old Chestnut.
Oh, that was good. That was good.
Yeah,
you did well there, buddy. I didn't have to do that. Liam doesn't. I'm not going to get you're not going to get in trouble from Liam this time.
But we've done 26, and we've had the number's not relevant, but he and I, it's like we're just laughing and laughing and laughing. So, and I owe you a big thank you.
Oh, well, it's been a pleasure having you on. And listen, every time we have you on, I get comments about I could listen to Morris all day, and people, you are truly a fan favorite. So
that's great. Yeah. Well, any parting comments you would have for young traders out there, or any thoughts that you think you'd like to share with people?
I guess one of the things that I'd like to talk about a little bit about is this idea that I get onto FinTwit or Twitter, or even I see people on TV and they're so sure of themselves. They're like, yeah, and it just kind of cracks me up that they don't really understand how how the world really works in terms of trading.
Yeah.
And it just kind of like, I saw something the other day. Steve Cohen was interviewed, and he said something to the effect that my analysts or our calls are right 55% of the time. 55%. Like that means they're wrong 45% of the time.
Yeah.
I've seen Stanley Druckenmiller, he's, he said I'm right 60% of the time. Like, so Stanley Druckenmiller and Steve Cohen are batting, let's say 60%. Like,
Yeah.
You're going to be wrong lots. So you better get ready to. And one of my kind of realizations that's taken me longer, and I feel like some people will never get there, is that really what you do about the errors or the losses or how you handle it when it doesn't go against you is what this game is all about. And, I always say that making money is the easy part. Like it really is.
Sure.
Like making money is easy. Keeping it is another, a whole other ball of wax. And I kind of laugh when I see these people on Twitter that are fighting back and forth. And like, these are big name people that are just, feel like they're going to solve something there. And one of them's going to be right. And I'm just like, first of all, I welcome people being on the other side of my trade. And and like, I think that anyone on a trading desk that's been around for a while understands that every single trade has to have two sides. And I think because a lot of these people don't actually see the other side, they don't understand that portion. But you and I have seen it. When we realize that for us to execute our trade and for something to be an opportunity for us, someone else has to be wrong. So why do I want to convince you that you're wrong?
Yeah.
Like, I don't want to convince you that you're wrong. I want to take the other side of your trade. And so we always had a line that we said on the trading desk was when we disagreed or, you'd have a trade. So we'd be like, see you in the machine, meaning, I'm going to bid, you hit my bid, right? Like we have a trade. Yeah. And I think that a lot of non-traders would be well served to just kind of think about that. And like, I know I'm going to be wrong all the time. Like you and I fundamentally disagree about where bonds are headed. Like we're on the other side of each other's trades, right? Like, let's face it, you're much more in the secular disinflation camp. I think that the world's changed and that we have fiscal dominance, but it doesn't stop us from, like getting along and having a great time and chatting.
We can both be right and wrong.
Yeah.
I'm the same thing.
Yeah. And it just really bothers me. And I don't know if it's a function of social media and the new world that we live in, but it just ends up being so tiresome. Like I don't need you to agree with me on everything.
I think I can explain this, what bothers you about it, if I may try.
Sure, go. Yeah, give me. I'm on the couch here for you, Dr. Sachs.
If you'll notice in the interview today, this is my first official interview, so if it doesn't come out great, tough luck. But I wanted to keep coming back to this transition in your life of becoming a proprietary trader,
right?
And so. And as you know, I'm not on social media.
Yeah.
I tried it, whatever. But I think what bothers you is what troubles me is you have all these people with opinions, and you and I, and probably many other people who listen, this is how they've earned their living.
Right.
It's not by shooting their mouth off on some frickin' website. It's because we got up in the morning and we earned the money. And as they said in the best trading book of all time, you can't tell till you bet.
Yeah.
And I'm guessing somewhere in that noggin of yours, you see these chuckleheads. And
maybe I don't know. I just feel like we can all have different opinions. Like that was the greatest thing about being on a trading desk. You'd go and everyone would have different opinions, different trades, all sorts of different things. You don't need to all agree. There's no reason, and there's no reason to take it personally. Like, what the hell do I care? Like, let's say you were the biggest crypto guy in the world. Like, the crypto guys are the perfect example. I think it's not for me. I don't think it's a good investment. But if you guys have nailed it, I'll be the first ones to say you've nailed it. I'll be the first ones to say, like, some guys will say, you're just a bitter a bitter guy that missed the long side. I'm not bitter about missing the long side of crypto. Do you know how many trades in my life that I could have been, let's just say, could have changed the welfare, made it so that I'm no longer a flying commercial. Like, there's millions of those. It's like not just crypto. There's a million of those. And if I sat around all the time worrying about every trade that I missed, I would drive myself insane. So no, I am not bitter that I missed crypto, and good for you guys that you guys nailed it. But they somehow take it so personally. And I'm just like, whatever. Like, it's like, think about, if we, as, like, let's say I was a value guy, and anyone who said that you're wrong about value, and I said, no, and I got up and beat my chest and said, no, you're wrong. This is going to be you're missing it all. Like, I don't care if you don't agree with me. Take the other side of my trade. You very well could be right. Like, me and Steve Cohen and Druckenmiller, we're going to be wrong at least 40% of the time, and more than likely even more. So no, I'm not sure about anything. Like, I'm not, and yet these people are so sure. And that's really what bothers me, is that when you present anything with that surety, and literally, if anyone tells me, and that's how I can tell a truly, like, somebody who takes risk for a living, you'll never hear them say anything with surety. And that's ultimately the biggest difference between, like, those knuckleheads and people that trade for a living. Like, go listen to Druckenmiller. He's the first one to tell you all of his mistakes. And listen, I've made tons of mistakes too. I still make them. My whole tagline is, all I bring to the party is 25 years of mistakes. I'm shocked at how many stupid ways I find of losing money all the time. My only thing is I keep coming up with new ones, and that's all. Like, that's the point. But anyways, it just drives me nuts, because I don't feel that it has to be so adversarial. Trading, you always need two people on the other side. I think that the Chicago people especially understand that. If you go look, and whenever I have a Chicago person on my, on the show, they're always much more just like, okay, I'm on the other side. Because they sat there in the pits and they saw guys on the other side of their trade all the time, right?
You had to trade with people. I mean, I'm from Chicago, as you know, and you had to trade with people, and you went home and you went down to sign the trader and you had drinks with them, and the whole thing.
Yeah. So I don't know. So that, to me, that's kind of one of the things I hope not just young people, but everyone just starts to realize that we can have different opinions, and it doesn't mean that we can't get along and we can't do it. That's true traders all the time are on other sides of each other's trades, and it's not personal. And to me, it's way too personal, and I just don't get it. Like, I don't care. Like, literally, like, you make fun of me all the time. I make fun of you. It's just part of fun. Like, it's the fun. It's the kind of, if you were working on a trading desk, you understand that.
Yes.
Like, obviously when someone gets really run over, enough, to keep your mouth shut. But the reality is that if you're having trouble dealing with stuff, then you're in the wrong business, because you're going to be wrong. You're going to have times when it's not going so well, and if you start taking everything personally, then it's not the right career for you.
Kevin Muir, you're one in a million. I'm so lucky and delighted I have gotten to know you. Oh. And why don't you tell the listeners where they can find you? Oh, wait, it's your podcast.
Well, listen, Morris, it's been a real pleasure chatting with you. When we thought about this, we were going to have you on, and you were like, no, I'm going to turn the tables. And I said, well, that's fair game. And so it's been a lot of fun, and hopefully I haven't bored too many people with my stories.
Well, I was riveted, and that's all I really care about.
And I've given hope to everybody who doesn't have their degree and is trying to make it in this world, in this trading world.
Yeah, says Kevin Muir, CFA.
I did get my CFA. You are correct, but I can't tell that joke. I have the greatest CFA joke that I can't tell, but sometime if you're ever with me at a bar and you guys get me off air, please ask me to tell you my CFA joke because it's a good one and I like it. Anyways, thanks for doing this, Morris. I really appreciate it. Have a great summer, buddy. When's your show? Now I'm going to turn the tables a little on you. When's your bike ride?
We tend. My bike ride, August 14th.
August 14th. Okay.
In Leadville, Colorado, and I'm ready.
You're feeling good?
I do.
So for those who don't know, Morris and I we FaceTime as we do this. And I've had the pleasure of seeing Morris for some reason. I don't know if his air conditioning's not working, but he's got a button-down shirt and it's now down to his navel.
Yeah.
I was going to say something. I was like, what the hell's going on here? And I was like...
I wanted my podcast with Liam. I actually took it off.
Oh God!
I've got a mansion in Greenwich, and there's no air conditioning in this room.
Really? It's like a hot room. Yeah. Well, yeah, exactly. Okay. So staying alive. That's what it literally looks like you're doing the John Travolta. It's a great look. I look forward to it. Thanks again for your time.
Take care, buddy.
See you later. Bye bye.
That does it for this week's special episode, and we'll be back to our normal show format after Labor Day.
We hope all you huddlers have a great and wonderful summer. Patrick, where can they find you?
You can find me at bigpicturetrading.com or on Twitter at Patrick Ceresna. Kev, where can they find you?
On Twitter, I'm there at Kevin Muir, and you can check out my newsletter at themacrotourist.com. And listen, we can never have too many friends. Bear market, bull market. We're just happy to spend some time together on this crazy ride. So thanks for tuning in.